So by my clock here is 10 o'clock, and I see a good number of people on. This is great. Good to see everyone. Well, not see everyone, see their, at least the names. Hopefully we will, maybe at the end, we could turn on all of the videos. It's also always nice to see people's faces, to see what, see that there's actually faces behind all these names. But anyway, let me share a screen. And this is a, last month we had a presentation by Jake Bernstein, and
Ken, you're muted.
Yep.
whoa.
There, we can hear you now.
Okay, sorry. Thank you for letting me know. How am I getting muted? I should not be able to get muted.
I think it's me and Jean as we're admitting people. I think we're kind of stepping on each other, and the participant thing jumps, and it keeps
just
hitting.
Unmute individually. Don't try to do or mute everybody at the same time.
The participant list keeps jumping, and your name's the one that jumps right at the click, and we keep muting you.
Okay.
Sorry.
All right. Okay. Technical difficulties. We're working on it. Okay, cool. All right, thanks. Last meeting we had Jake Bernstein, and I uploaded the meeting presentation. And then also just this morning, I found his setup and timing triggers from 2012. So you'll see that on our website.
Oh, very good. I did his Santa Claus rally trade. Got in on the 22nd and out on the 7th, and it worked.
How did you do? What did you do it on?
I did it on SPXL.
SPXL? Did you use options? Oh yeah.
No, I didn't use options, just straight long.
Oh, okay. So what was the net result percentage?
Let me look at that real quick, and I'll let you know.
Okay. Yeah, I had so many different things that I was working on. One of them is that I tried to code up Jake's strategy per all the hints that he had in our meeting. And then I also looked at some of his previous presentations to see if they had any additional hints. And so what I'd like to do with this morning is I'd like to share with you what are the results of those work. And one other thing is that if you go to excess profits, and if you go to TradeStation code, you'll see this one here is my attempt at Jake's strategy. And you could load that into your TradeStation and just play along or whatever. I've actually upgraded it yet another. So this is version 2, and I've upgraded it to version 3 that I'm working on right now. But so what I was going to do is I'm going to show people what what I was able to get out of the strategy.
Real quick, Ken, it was 9% return.
9%, excellent. So that's 9% in what, 2 weeks?
Yeah, about a week and a half.
Not bad, not bad at all. Excellent, cool. And I remember you and I were doing an analysis offline, and that was like 75% probability of a positive return.
Yeah.
Something like that. Okay. Yeah. the cat trade that we did had, I think it was like a 95% probability of success. So that's why I put that one on, felt pretty good about that, and making 50% of my money in a week and a half. That worked out great. But it was an option trade. So anyway, let me show you some of what I did with Jake's strategy. And what I tend to do is I tend to compare it to a buy and hold. So you should be able to see two charts here. The top chart is a buy and hold, where you basically would buy, where we had the start of the rally in April to now. And you can see the numbers in the corner there. So if you would have bought SPY at that time and held it, you would be up 49%. So this is basically buying, 300 shares here and just holding on to it. This bottom one is my interpretation of Jake's strategy, and it's basically going in, going out, going in, going out, all the way on up. I could actually, I'll show you it for various other equities here. I can just click on it, you can see what the results are. But what is unique, what I like about it is that if you look at, there's a little number here, it says maximum drawdown is 8%. Here's maximum drawdown is 6%. So when you trade it, your drawdown is less. And I personally like that. When the market is going down, he's out of the trade. So I'll zoom in here, I'll show you. I'll try to zoom in here, and I'll show you. So this was a trade here. He's out. This was another trade that he tried to get in, and it lost a little bit, but it didn't lose all of this. So basically the equity curve goes flat for this whole period of time, and then it comes back in over here at this in October. So going in and out, usually it's very hard to beat buy and hold in terms of the long term, but the buy and hold tends to have more of a drawdown. If you look at some of these other equities, let's try TQQQ. TQQQ has a drawdown, if you buy and hold, of about 35%. And if you use Jake's strategy, I'll say Jake's strategy, but it's my interpretation of Jake's strategy. So it may not be optimal, right? And it may not be perfect. If you would send me the code, that would be better. But I'm basically just using the information that he provided us to actually implement the strategy. So anyway, this one here has a drawdown of only 16%, and the buy and hold had a drawdown of 35%. So from the peak to the valley here, see where it pulled way back, you actually had a 35% drawdown. So if you had $100,000, you would have lost $35,000 temporarily, right? And then it comes back, right? On this one here, on his strategy, you lose very, very little. And I really like that. If you can you can basically get the same kind of return on capital, or even close, and have a lower drawdown. I much prefer that. And so this is $318,000 over the last, that's the total equity, $318,000 starting with 100,000. So it's up 218%, which is pretty good. The buy and hold would have been up, subtract 100,000 off of that, but it would have been a 293%, almost. Well, it says 300% here on the return on capital. So that's not bad. That's really not bad for a buy and hold versus a trading strategy. And here is the UDAO. And so you can also take, so what I could do with this one workspace is I can go click on down through it. It all starts with the same amount of capital. And what you could do is you can look at the end point here. So it starts out with $100,000, and you can see how much it made over that period of time. So here is TQQQ, you're up to $318,000. Here is SPXL, and you're up to 210. UDOW is 130, so it's a 30% gain. And the TNA is 345, whereas if you would have bought and held on that, you would have been up 500, almost $600,000, almost a 500% gain on TNA. And SPY unleveraged, you got a 37% gain buy and hold, and he got a 29% trading it. So a lot of people wouldn't even bother with the trading. It's just, it takes a lot of work. So people that are doing investing, they probably want to stick to the buy and hold, but you want to basically try to get out before you see any kind of a drop like this. And then so, let's see here, SQQQ is the opposite. And there, if you would have bought and hold, you would have lost 85% of your capital. And trading with this thing from Jake, yeah, you would have lost 63% of the capital. So I'm trying to figure out a way to just basically keep the thing from trading. When you see a down market, when you see an equity like SQQQ, which is the opposite of TQQQ, so it's the bear case, you really don't want to be trading it. You want to just stay out of that market. So I have indeed tried to figure out various ways of getting out. He used the Williams accumulation distribution indicator. And I haven't implemented that in this particular version of the strategy. So it looks like it's always below the moving average there. So that it shouldn't have done any of those trades, which is good. I like that. I like it that it keeps you out of the trade. It gets you out, and then it keeps you out of the trade. But for the most part, you know, most of these are kind of nice signals. These are nice equities, nicely upwards to the right equities. But what happens if you could take this to intraday bars? So he typically, what he talked about last time, I think, was almost all daily bars, and I think he even talked about weekly bars. If you go back to that video that I showed you at the beginning of this, you'll see that he goes through this whole thing. He says from monthly, weekly, daily. He just says pick the type of trader you are and stick with that. Don't bother trying to do all of them at the same time. And I really appreciated that. That was an aha for me. And it's like, yeah, that is true. So, but I wanted to see if his strategy would work on intraday bars. So I created this other workspace, which this is a little more sophisticated in that this will not trade if the market is going down. If the market is going down, it just says, you know, you stay out of the trade. So there's SQQQ. And basically, it looks like it was going in, and then it basically got out and never ever tried to get back in again. So this is daily. This is 30-minute bars. This is 15-minute bars. And this here is 1-minute bars. So I like the idea that it basically didn't trade. I like it, that you could basically apply this to almost any stock, and if the stock has any merit at all, it will try to do its best at trading it. So we talked last time about symbol ICLN, ICLN, and this is basically trading the daily bars, and it how much did it trade? Try and remember. Hold on a second. I want to see how much it's starting to trade with. So this is trading with $100,000. So it started out with $100,000, and it does compound. So over the last year, this thing made $73,000. That's trading daily. Over 30-minute bars, it also has a really nice, so this is an equity curve here on the bottom. You kind of have to look real close, and it shows the trades, individual trades, whether it made profit is green, if lost a little bit is red. And so you've got a pretty nice upward moving equity curve here. But it didn't make any trades back here because there wasn't enough positive upward movement. So it stayed out of the trading, which once again, I like that idea. And it gets you out when it starts going against you. So this is clean on the 15-minute bars. So you see a nice positive gain here. And when you start getting down to the 1-minute bars, it will work. The 1-minute bars, I only looking at it for the individual days. I just want to see how it performs on a day bar, over day bar, intraday 1-minute bars. Probably not going to trade this because there's just too much. Once you get down into 1-minute bars, in my opinion, you're seeing noise in the market. 15-minute bars are much more predictable, and then 30-minute bars are even better. You have a better possibility for a positive expectancy there. So, any questions on this? Because I was going to go to something else, unless somebody else.
I can.
Yes.
I can. This is Jack.
Jack.
One of the things you're talking about the 810 channel, right? Just to verify, I joined in a little late. Is that correct?
Well, he said 8.8. It's actually 8.10. If you look at the charts that he had.
Right. No.
8.8
is different. 8.8 is 8 period of the high. Sorry, 8 period of the low closes versus 8 period of the opens. 10.8 is 10 period of the highs and 8 period of the lows. So he was talking about the high-low channel. And what we found is if you take the Williams AD and further supplement it with MACD, okay, you will actually get MACD filtering out. It filters out some good trades as well, but usually it does filter out the bad trades.
Oh, so wait, there's MAC, there's MACD.
There's MAC, MACD, and WAD.
Okay. What settings of the MACD?
Standard setting MACD, but instead of using close, use OHLC4, open, high, low, close, divided by 4.
Okay. So did you code any of that up, Jack, or not?
Yes, I have.
Do you have any equity curves, any results?
Well, it depends on whatever you're trading it on. It's the expectancy is almost always positive, except a few stocks, and the win ratio is about 78-79%.
So that's kind of the numbers that I got here too. So if we look at the performance report, you see this is 68%,
right,
on 15-minute bars, and and about 80%, almost 80%, not quite 80% on the 30-minute bars. So that's a much better, and the profit factor is at 3.3. So for every dollar you lose, you make $3.30. So that's not too bad. That's pretty good, but that's again on clean. So you have something that's upward bias already.
Well, try it on SPY.
Yeah.
And by the way, my results are depending on the stock, somewhere between 10 to 20 years.
10 to
over
20.
10 to 20 year period.
Yeah.
So it does include some, pretty bad downtimes, extended downtimes as well.
Okay, that would be great to show that. Could you show that as part
Oh,
of this. So,
I can't show it right now. I'm not set up for it, but
Hey,
Okay.
Ken,
I just wanted to share it.
Ken,
Okay.
I download, I
Yes, Tom.
downloaded your ELD.
Yeah.
But it's obfuscated or compiled. Can you provide the source code somehow?
Yeah, I could do that too. Yeah, but that's only for, it's designed for people that have a trade station.
Yeah, so I do most of my back testing in NinjaTrader, so I wanted to translate it.
Okay, all right, I'll post that. I'll post that when we get done here in the same general area.
Cool.
And then instead of an ELD, it'll be a text file. So,
Great,
okay, sure. Yeah, and what would be great, so.
Yeah, if I find anything new or any way to enhance it, I'll let you know.
Please do, that would be great. I'm one of these people that's extremely curious, and somebody shows me something, it's like, okay, you haven't provided me the code, but you give me enough hints to go on. I'll code it up really, really quick to see if there's really something there.
Yeah, I took notes on his presentation as well, and I didn't code it up, but I would like to go back and try again. The SQQQ is an example of how things like this don't always work well in bear markets.
Correct.
So as long as we're in a bull market. So I like the filter that you have that will only trade if it's in bull market, if the market in general is bullish.
Yeah, you're absolutely right.
Not gonna be bull market forever.
Right. So this year and last year, 2020, yes, we had a really bad down period, but it's been an incredible bull market. Yeah. But that's why I wanted to test it over 10 or preferably 20 years, which gave me a more realistic understanding of how it would perform.
Right.
And did you put in all of the qualifiers that he had? He has so he has not only the triggers, but he also has some setup conditions. So
right.
The key is figuring out exactly how those setup conditions work, and that's one of the things that I was working on.
Well, let me ask you, there's actually two ways of trading it. One of them is a channel breakout. The other one is a channel itself. Which one did you code? So are you waiting for 2 bars outside the channel to get in, or are you entering at the low band, exiting at the high band?
I wrote that a month ago. I have to take a look at the code.
Yeah, my notes, he called the channel strategy. You have the 8 SMA of the lows, the 10 SMA of highs, the Williams AD, and the 57 period moving average of the Williams AD.
Yeah, but as I said,
complete bars outside the channel.
So he's okay. So there are 2 ways to trade this, guys.
Yeah.
One of them is you wait for 2 days completely outside the channel, and then that's your entry. And then your target is 2x the channel, or you buy at the low channel, and while the trend is up, you buy at the low channel and exit at the high channel.
I think that's what this thing primarily does.
Right.
And then also he had a thing where he would exit his first tranche and try to move up his stop, so that he could try to at least break even. And and so with the strategy, or maybe drilling down a little bit, some people may be this may be a little bit beyond them. Sorry, we'll just I'll get back on track here really quick here though. So stick with us. So there's a couple of profit targets here, and if you could iterate those things and put in whatever you like, so that it will try to maximize or minimize your drawdown, like what Jake was suggesting, that he tries to bring up his stops. So with a couple of numbers in here, you can actually tweak that and see if it improves. And it gives you maybe a better emotional feeling that, oh, okay, yeah, you've captured it, you can't lose anymore. But realistically, in terms of the profitability, when you back test it, you optimize it, it's always less optimal in terms of if you're optimizing for return on capital, not optimizing for emotional response. So I thought that was interesting when I actually did this. I put those variables in there just to see how that would work, and every time it optimized to just get me out when it says to get out. Stay in there, don't bother this intermediate stuff. So Anyway, okay. Any other questions? Scott, Jack, comments?
Ken, could you go back a little bit further? You only tested this on the bull market. Could you go back a year, 2 years maybe, and show how that
No,
was?
so this is the bear market, right? So this is SQQQ. This is a bear. Okay, it's been going down for a year.
No, I meant, let's take SPY, for example, instead of just starting in April, going back maybe 2 years or 1 year at least.
Yeah, so I'll leave that for Jack. Jack was talking about it.
Yeah.
I don't know exactly how much, I don't want to spend a lot of time on it.
Well, you can just set it back to 10 years or something and then look at the system report.
Yeah, all right, real quick here.
And it's only trading the longs, right?
Correct.
Yeah.
Yeah, so here's the last 10 years for this particular optimization, and see if I did anything special in here. Okay, so let me get rid of this one. So I actually created another strategy this morning, see if this improves it. It doesn't really improve it much. So this is he's using his Williams adaptive or accumulation distribution as a qualifier, and it didn't do as well as the one that I came up with. I did a
What is your profit? Where are you taking your profit?
there are two different profit targets.
Okay.
You have TradeStation, right?
Yes, I do.
Yeah, just download the code. You'll see how the thing works. It's a function, basically the function that he explained. He said, you know, take it 2 times the bar width or the band width and stuff like that. So yeah. I don't want to spend a lot of time with that one. All right. Okay, so that's basically the daily and the intraday. And to me, it's like the intraday does have some merit. I mean, I would seem to be in the 15 to 30 minute time frame category. That seemed to be a pretty good, got a pretty good return on that. So let's see. So as Tushar here. Did Tushar make it back here? I don't see Tushar. Okay. I had been trading verticals. Tushar mentioned that you want to basically, if it pulls back, a vertical pulls back against you and you lose 50% to get out, and then when you make 50%, get out. If you go through that, you basically have a negative expectancy, because if you make 50%, if you lose 50%, you got to make 100% back in order to have a zero profit factor. Just basically 1-to-1. You're basically making money, losing money. You're not going to get anywhere. So, but what I did find is that on IWM, this is the I was basically doing a vertical on IWM, and IWM was going up nicely, and I wanted to see how the spread actually worked, how the spread interacted between all the different parameters, the implied volatility, everything changing, and basically what I cared about is the end result was the price. So this is the one call. This is the other call. This is the top call at, or look, bottom call at 191, the top call at 202, and then here's the vertical and the spread between the two of them. And this is the pullback. So this is the percent pullback. And that what I thought was interesting is that it never really made it up to the 50% target as an exit, which I thought was pretty fascinating. This is IWM, and it did pull back 5.1%, And typically I'll take 10 times that, which is 50%. So I would think that that would have actually pulled it or exited the trade, and it got up to 45%. So this is the 45 percentile here. So it came close to exiting the trade. So I kind of like the idea of the 45% or 50% pullback, but I want to get more of a, initially I want to be able to get something greater than a 50% return. You need to see something like 100%, in my opinion. Unless other people have other ideas. I don't know how other people trade verticals.
I trade a lot of verticals, and I know have some idea about what Tushar does. It all depends on your win ratio, how close you get, what your deltas, your short delta is, what your gamma curve looks like. So it's I think it's really hard to say, well, I had a 5% pullback, so that's equivalent to a 50% pullback on the options.
Right.
So
Yeah, and that was
like
just a simple evaluation or investigation here.
Right.
This is very, very crude. So yeah, so I'm looking for
'cause-
guidance by more frequent options traders.
So yeah, because that might be a little misleading because even everything is the same. When the stock drops down, the volatility will significantly increase. Just a change in the volatility will make a huge change in the premium price.
Right.
So it's very difficult to estimate what the option is going to be based on what the stock does.
I hear you. But the thing is that I was surprised that the implied volatility didn't really change that much through this period of time. It dropped. It did increase a little bit, but it didn't really go. Like it. If it gets outside of the trend band, it will dramatically increase, like you say, exponentially increase the implied volatility. So, yeah, I agree. So it'd be interesting to see what you do for your verticals. What's your entry exit criteria for those?
Well, I trade the MAC channel, and I trade that with verticals.
So your MAC channel based on Bernstein's stuff?
Yeah.
Okay.
Yeah.
Okay. All right. So okay. All right. Okay. Got a lot of questions flying up in my mind here. I gotta quiet those down. All right. We'll get drill down into something much deeper than I really want to go for this. All right. So
and by the way, if you're trading verticals, usually if the profit is 50%, the stop is like 100%. It's 2 to 1.
the stock is like 100%, 2 to 1.
No. The stop.
Oh, the stop.
Like if you're taking, if you received $1 in premium on a put spread, you exit at 50 cents, but your stop is at $1. So your stop will be when the premium reaches $2. So you have $1 loss.
Okay.
That's kind of the norm when you're trading spreads.
Okay. Well, one of the things I found really cool about the recording these sessions is that some things that people say I kind of understand, but going back and reviewing them, it becomes a lot clearer. So hopefully you don't mind me sharing your pointers and stuff with the other members of the group, posting this thing to the web. It's been really great. We got 130 views on the last posting that we did here. So I think it's helping quite a number of different people, including myself. So, all right, let me go on. I didn't want to take up all this time. So people generally ask me about money flow, and I thought this one was really unique here. Prior to the election, prior to the, not the election, the tallying of the votes, the electoral college voting, the market was surging. We had money was flowing in. This is SPY. Money was flowing in, and the market was just rocketing off, which was great. And since then, for about 2 weeks now, the money flow has been absolutely flat. It's not only been flat in the S&P, but it's also been flat in the Qs for even 3 weeks. And you can see that basically the price of the Qs have basically been going sideways. The large cap, the same thing happened. We had a surge prior to the electoral college, actually the day of the electoral college voting. And then it basically been going flat. The money flow has been going flat, and so is the price. But the IWM, on the other hand, has been just rocketing. We've got a really nice money flow going into it. The price is going up nicely, nicely well behaved. The other ones, we have XLF, the financials seem to be starting to get money flowing into them right now. So I would expect there to be a little bit of a rally there. The transportations have been going sideways. It's been just whipsawing, and the high to lows here have been just pretty volatile in my mind. And then the materials, which were really, really good prior to this in early November, December, have basically been plateaued out. So we've got a little surge in the money flow, but nothing significant. The surprise to me was the Chinese. We had started seeing some pickup in the price around the just before the first of the year. And now we've got really nice money flow going into that. And this is the China, this is FXI. This is the 50 of the Chinese. It's kind of equivalent to the Dow Jones Industrials for China. And it's been going up very, very nicely. So that's all I had on the money flow. So that, then the next question is, we had a number of presentations, or people chimed in and made some really great suggestions about various stocks. And I think it was Judith here somewhere. Is Judith here? I think she was the one that mentioned ARK, ARKK, and that has been just stellar. Since the November meeting, it's up 29%. It's really, really nice. Excellent. It's beating Qs and SPY.
Hey Ken, where is your money flow indicator? I know you have a nice one. How can we get it?
It's on the website. On my website.
Whereabouts? I'm on your website.
Ken Hoder at yahoo.com. Ken.excessprofits.
Right.
And then go into the trade station code.
Oh,
and
okay.
There's money flow right there.
All right. Thank you.
Yeah. Okay, so ARKK was one of them, and that is really, really nice. I didn't get in with enough. I only got in with a small amount. Darn it. So
yeah, all the ARK ones are doing pretty good. I've been in the ARK K and ARK G.
ARK D?
G as in
Delta?
golf.
Golf. Oh.
It's Genome. It's their biomedical fund.
And she's getting ready to create a ARK X for space exploration type of stocks.
Let's see why this is.
ARKQ is also very good.
Okay, well, this is interesting. I had to stop the screen share for a moment here in order to type anything in there. So here is ARKG. So ARKK is up 236%, so 29% since November. And then ARKG is up 37%. Nice. Genomic Revolution. Okay. And then ARKQ is up 25%. So ARKG and ARKK are the clear performers there. Interesting. Okay, that's what. Do you, who was mentioning the ARKK there? ARKG?
Jennifer.
Oh, Jen, did you do any research into the ARK funds at all to see how they're doing it?
No, what I did is I looked to see what holdings were in each of those. And the genome is just something that's been a lot of talk lately. There's a lot of science around it, a lot of like crime investigations starting around it. There's just a lot of buzz around it. So there were a couple companies I was thinking about investing in. So I went and took a look at this ARKG, and they have holdings in several of them. So I figured it might be a little bit safer bet to grab up some interest in this versus individuals. And so far it's done very well for me. I think I got into it back in, I want to say September timeframe.
Now, is it a leveraged fund, or is it just they're picking some stellar companies?
Just some stellar companies. I don't believe it's leveraged as far as what I saw.
Okay. Yeah, because
the ARK-K has I think it's the ARK-K's largest holding, I think, is in Tesla.
Really? Okay.
It isn't. There are two other funds. One is ARKF, it's the financial, and the other is ARKW, which is Next Gen Internet.
And I think there's an ARKI as well, isn't there?
I don't know of that one. Oh, there is a fund that's in Israel though, and that, so I think it's, I don't think it's ARKI. I think it's like IZRL, but it's in her portfolio, and it's an ARK fund with Israeli technology.
IRVL?
IRZL, I think, but I don't.
IZRL.
Yeah, but I'm not sure that, well, we can't buy it in any of our markets.
Oh, okay. All right. That's why I'm not seeing it.
Right.
And she also has a 3D print one. That's PRNT.
CRMG. There's a
P as in Paul or Papa.
PRNG.
N as in November. T as in Tango.
Okay. Print. Oh wow. Okay. So that's up since November is 35, almost 35%, and yeah, it's performing. It basically was following the cues until something happened in November. But yeah,
yeah, it's focused around 3D printing technologies.
Oh, I see. So it's not typical printing stuff, the 2D stuff, but it's actually 3D printing.
Yes.
I got it. Got it.
Yeah, I think if you go to ARK Invest, the website, it'll list everything out that's being discussed. And Kathy Woods has a very large following now because of her Tesla calls. So she's becoming very followed for her innovation. She has a lot of innovations with a high volatility. And it's unique about her ETFs is they have high concentrations. It's not uncommon for 10 stocks to make up 50% of her portfolio. So that's what's also unique, is a high conviction rate in their stuff. Yeah, Jen has it on the thing, right.
So it's got an exposure then, more concentrated exposure. But even 20 stocks, that's pretty diversified though.
Yeah, compared to buying some, exactly, compared to buying one.
Yeah.
I don't know who mentioned it, but I agree. I invest in all the ARKs, and you can invest in the Israel one also. It trades locally. Yeah.
Okay. Cool. All righty. Also, we had somebody mention Floor, F-L-U-O-R last time, and it's up 20%, pretty volatile. Performance hasn't been too bad here since April, but to me, that's I like ARKK. The volatility in ARKK is really well controlled. I really like that. I don't know if anybody's got anything comparable to that. Also, we had IPO was one of the ones that people mentioned. And that's up 16% here since the November meeting. And
I've been doing really good with Lemonade, LMND.
and
Lima, Mike, November, Delta.
thank you. Holy smoke. Wow. So that is a recent issue.
Yeah, it's a SPAC IPO.
So is there Lemonade? Is that I am not familiar with it at all.
It's a kind of pick and choose insurance company, pay for insurance only for what you need type of thing instead of a preset package.
Okay.
It's a drink made with lemons and water and sugar.
And I'm enjoying its flavor right now.
Where did you find out about it, Jen?
Honestly, listening to Kramer, there's just been so many of what they're calling the Robinhood traders, just kind of like they're calling it their social media trading, where they're all kind of gathering and making decisions to jump in and out of things at once.
Got it.
And they're making big moves on things by doing that. And so I've followed several of these IPO or SPACs the last several months and jumped in them and then gotten out of them. And I've done pretty good on grabbing the gains on a of them.
So do you wait? Do you do it the following day after Kramer or one of the?
No, I do it a few days after it starts on the market.
Okay. So you're playing the momentum, or do you wait for the pullback?
I wait till the pullback.
Very good. That's really hard to do. That's really, really hard to do. I give you credit for that. That's very tough. All right. And XLB, somebody mentioned XLB previous time, and XLB is a Select Financials, and I was tracking something else for the, or not financials, the materials, and I was tracking something else, and this has much, much higher volume. It's like 9 million shares per day. So I just use that just to see what's going on in the materials market. I don't actually trade it. Anybody else have anything else? So maybe, well, okay, so we actually did get some really cool ones here. I'll have to keep tabs on those things for the next meeting and see how we do on those. What I like it to see is that, you know, people come to this meeting and it's free to come to it and everything, which is great. And sharing these ideas, every time I come to one of these meetings, I usually make $200 to $500 or more. And it's the only meeting I know of that you can actually come to learn something and make money on that. So that's really great, but it requires people to be open about what they're seeing and share, which is really fabulous. So I thank you all. I also, so unless somebody else has some other ideas in there they want to take a look at, I will go to the next section here. I don't see any.
Look at Lit, Lima, India, Tango.
India Tango.
Kind of fun one.
Okay. And lithium.
The lithium ETF.
So Scott, you're in this now?
No, I'm just watching it right now. I wish I was in it.
So
it's pulled back, so it might become pretty soon a pretty good spot to get in.
So Scott, do you trade the individual stocks or do you trade options on these?
Mostly stocks and futures, but I also use some options as well.
So wouldn't you trade on something like this? You've got a little pullback here.
Yeah.
Wouldn't you try to maybe get into a vertical there, or would you go long? Because one of the things that we had a criteria in the Investools is that if it's above $50, it's okay to start trading the options on it. Below $50, it's really scary. It's just there's not a lot of opportunity there.
Yeah, I hear you. And you got to buy a lot of contracts. It costs a lot of commission.
So do
Probably
you have any
low.
particular preferred trade on that?
This one I would probably just do the shares itself.
Really?
Yeah.
Okay. All right, interesting. Anybody else have any, how would anybody else play this? This looks to me like a very nice equity curve or nice profit curve. And by just using a few options, you can really kick that sucker up. So this gained 25%. You could easily have made several 100% on this over that same period of time.
So just looking at your volume graph, just looking at your little grid there, you got 1.3 million shares times $68.
Yeah.
So you're looking at $68 million a day of dollar volume.
Yeah.
Not really a lot. So you might not have a very liquid option either.
It doesn't, I don't think so.
That's a good point. Very good point. Okay. But I do, yeah, that's a real good point. Yeah, with that, yeah, only 1 million shares traded.
$80 million a day of dollars moving through it.
Yeah.
Not a lot.
Yeah. Yeah. So if you do any kind of option trade, it would be, I wouldn't put on a vertical because I'd try to buy back the other side somehow, but a single-ended option trade where you basically just say it's either going to make money or it's going to lose money or it's going to go to zero, that would be okay. Other than that, yeah, I think you're right.
At this point, I might want to do like a butterfly, a call butterfly, just because it had that huge jump from the beginning of the year.
Yeah.
And so it's kind of parabolic, and now it's kind of consolidating. So
Okay.
the butterfly would be cheaper if I'm wrong, and it may not make another parabolic move. So you could.
Hey guys,
you can maybe try to pin a butterfly around $75, $80.
Okay.
Scott, I'm looking at the option volume.
Yeah.
On lithium, there isn't any. So
I haven't looked at it, Shane. So
I mean, a good day is like 40 contracts exchanged hands.
Yeah.
All right.
So,
okay. Forget it.
Never
Okay.
mind.
Okay. So it sounds like you're right, Scott. Don't play the option. Just play the individual stock.
Yeah.
Yeah. Yeah. And it's probably not out in the forefront in terms of. It looks like it's been stealth. It looks like this kind of a curve to me looks like it's a stealth curve that just keeps on going up, going up, going up. You got a nice, nobody is getting into it, and then all of a sudden you have this big spike here. This to me says that somebody big is actually trying to acquire it, or that would be interesting to see if there's insider tradings that are making most of
jumping on the EV train. Yeah.
Yeah.
Well, you if it's a long-term thing, you could actually do like a 45 or 90-day, just sell a short put and take the risk, and over time, your data gain is going to pay nicely on this kind of move.
Yeah, but with the liquidity though that you show there, it's kind of I would be hesitant to do any kind of option trades. I think Scott is more in line with just sticking with the stock. Okay, that's an interesting one though. I'll have to check that one out. I kind of like the idea of the lithium stuff. All right, any other suggestions, ideas? Okay, let me move on. I'll show you something for any of you that do trades, do use TradeStation. I do have code there also in that same spot that I was showing Jack earlier here, which is price point here about a trend line. So you could basically trade about a price point, and I usually use the first few minutes of the day to say, okay, if it goes above this, go long. If it goes below that, go short. And so this is a Friday's trades of that kind of strategy based on 1 minute bars, and it has an intermediate profit target, and then it has an endpoint profit target as well. So this one here is Facebook, and it went in at the beginning of the day. It just made a trade, got out, made a trade, made a profit, came back out, got out, made another trade, made a profit, and then basically waited to the end of the day and then exited at the end of the day. So each one of these things has a little bit different profit curve. Sometimes they make money, sometimes they don't. And I'm trying to play some of these different stocks, but you have to have enough liquidity. So Scott, even the lithium may not have enough liquidity to be able to do something like this. But I'll take a look at that, see if I can make any semblance out of it. PLTR is a very, very nice, when you look at the difference in price through the day, you'll see 5 to 7% difference between the open and high or low. So it to me seemed like it would be a great opportunity. However, the liquidity there is just not there. Every time I've tried it, the whipsaw just kills me. So this one here, I didn't actually trade it, but it would have lost $200 on that trade. So it made 2 trades. It says, no, I'm not going to make that. I don't trade anymore. I usually let it go for about 3 trades. And if it doesn't start making money in 3 trades, I say, just get out of it. Just don't bother with it. And this one here made.
How long does it take to just make a decision on what the price point is, that long yellow line?
So that long yellow line is basically the open. And then what I do is so I say, consider the number of bars back. So I say, consider 3 bars back and start your time at 6:33. So it waits for 3 minutes, and then it says, okay, after 3 minutes, the market has either decided it's going to go up, it's going to go down. I don't know which one it is. And it does the determination, and it'll either go long or short. This particular one was short, and it made a profit, hit the first profit target. That's this one here. And then at the end of the day, it hit the last profit target.
I see.
Well, not profit target. It actually ended the day. It just gets me out. I want to try to be flat. With all the stuff coming up, I didn't feel comfortable. And what's funny here is that Tesla made money on the short side, Nvidia made money on the short side, Facebook made money on the long side, Zoom actually lost money, $69 before it just stopped trading. The SQQQ made money, which is the bear case, and the TQQQ didn't even get in. It did, after the first 3 minutes, it would only go long on TQQQ. TQQQ and SQQQ are hard to borrow, so you really can't go short. So I use those 2 in the same account, and I will trade whichever one goes long, and the other one I can turn it off. So the other ones, these, like SPY, this one here was going long or short. I don't care which way the market goes. It blows long, blows short. I don't care. I'll take either trade. But at the end of the day, it only made $4. Like, so it did it did 4 trades through the day, and it lost a little bit. So I made good money on the first run, a few bucks, and then it lost.
Hey Ken, I have an algo very.
Yeah, Scott, try again.
Sorry, I have an algo very similar to this.
Yeah.
And what I do is I look at the open just right at the 6:30 open, and then I only trade the first half hour, because the first half hour is the most volatile, and the trend of the day is usually established early in the day.
So you're looking early hours, pre-market?
Just no. Just the first. So between 6:30 and 7.
Okay, so half an hour.
After 7, I don't enter any new. I don't switch positions at all. I have a switching algorithm very similar to this.
Yeah.
But after 7, I'm done. So after 7, it just holds whatever position it's in till the end of the day. And I do have a target, but frankly, my algo doesn't work very well. I don't make very much money on it, if at all. And I don't know why. Are you having success with this? Because I'm wondering because you have the 3-minute wait period, and how do you measure your target? I have targets also. I usually take like 3 was it 40% of the I think it's like 3-day or 5-day ATR is my target.
So you see this chart here?
Yeah.
So this chart here it computes the standard deviation and the mean of the movement of all the movement of any stock. It looks back, I don't remember how many days, but it looks back, some of them are days, and it says, okay, Baidu typically will do 2.19%, and it has a max of 4.39%. So I set my first target at the typical, and then I set a maximum target of 4.39.
Are you measuring the intraday range or
Yeah.
ATR?
Mm-hmm.
Intraday range?
Yeah,
high to
from
low?
the open. From the open. Yeah, so these are all measured from the open. So if you have TradeStation, I can just send you the code. Don't worry about it. You just put it into the radar screen, and you can find out what each one of them does. And if you go down to PLTR, so PLTR is one of the ones that I just thought, and I saw this, and it's just great. So the typical day, it moves 3%.
Yeah.
You get on the right side of those trades a few times, that's a really great return. And then the maximum you're going to see is a 6.28%. So
I actually have a scan that it scans for the stocks that are moving arranging the most percentage of their price.
Yeah.
So like one of my favorites is Overstock, OSTK. It moves 5-10% a day a lot of times.
What is it?
OSTK. That's the Oscar Sierra Tango Kilo. Yeah.
Yeah, that's great. Wow. Okay.
It moves up and down a lot intraday.
Yeah, but the question is, how is the liquidity? Can you actually trade that?
Oh yeah, that's pretty liquid.
Okay. Because like I said, PLTR is not.
Yeah.
So okay, all right, I'll check that one out. That's a great one. Yeah, that's better than PLTR.
So the scan you have, these stocks you just kind of manually pick, whereas I have a scan that tells me which ones are moving most intraday.
This is the result of the scan. So
Okay.
what I ended up doing is,
scan.
so what I can scan a whole bunch of different stocks, but there's only about 200 of them out of all of the stock market. There's only about 200 of them that I can really trade because of the size of the trades that I'm doing.
Yeah.
And I typically try to do options as well. So my set is much smaller, but I'm going to take a look at the one that Jennifer was talking about, that Lemonade, and see if it's big enough to trade it or not. See if there's enough liquidity there.
Oh, hey Ken.
Yeah.
I have a list of about 80 stocks that I know the option liquidity is good. But I'm happy to I'm happy to send you mine, but I'd love to see yours. You said you had 200 stocks.
Yeah, the
liquidity is good.
Yeah. Mm-hmm. Yeah. I mean, I'm
would you
talking
be
about
okay
stocks,
if
ETFs, and everything. Yeah. Yeah, I could set
right. Where there's good option liquidity. Yeah. Okay. Fine.
Yeah.
Thank you.
No problem.
Yeah. Usually, if something has good stock liquidity, it'll also have good option liquidity. I define liquidity as dollar volume. So price times volume.
Right.
That just tells me how much money is moving in and out of stuff.
Yeah.
Which I think is what matters, not necessarily shares, because it depends on the price.
Yeah. Yeah. And in here, there's a fellow by the name of Mark Crispberg. So if you go to high tick, if you click on this, you'll see an outstanding website of TradeStation code. This guy by the name of Dr. Mark Crispberg does fabulous coding, and he did that, and he's got a scanner, he's got a radar screen, all of it's TradeStation. I don't think he's got anything of it in text form, but yeah, I've seen he uses that a lot too, because he's running for the same kind of problems of liquidity.
Yeah, to follow along with you, I've got to get a TradeStation, but I don't want to use them as a broker. No offense to them, but
so
maybe I should set a little small account just so I can use the tool.
Yeah.
They used to charge a fee to have a monthly fee, which really turned me off.
Yeah, it's free now.
Now they don't.
So So yeah, so Scott, we should talk a little bit offline here, or if at the end of the thing, if you could just hang around, maybe we can not bore everybody else with some of the subtleties. So anybody want to stay around for talk about TradeStation and pluses and minuses, hang around after this one. If you're willing to stay there, Scott, I'll find out at the end. Okay. All right. So price point intraday. I don't know how many people here trade intraday. I should have created a poll. But is there a way that you guys could just there's a reaction? Let's see. Oh yeah, in the participants list, you should be able to.
There's a yes, no, maybe everyone can just click yes.
Yeah,
if they do
so the
intraday.
participants list, yeah, if you could say yes or no, it would be interesting to see how many people trade intraday. 1, 2, Catherine, me. Okay, so just a few people trade intraday. Oh, lots of people saying no. Okay, interesting. All right, cool. All right, well, that's good to know. So it's like Catherine, Bruce, and myself, and Scott maybe trade intraday. Jack, do you trade intraday?
I used to. I kind of stopped.
Okay.
I used to trade the ES, but I stopped. I'm doing more swing trading now.
Okay. Yeah, the longer you hold it, the better, the more profits you make. But all of my stuff is I have cash that's still available, and I use it just to play some of the various games, see what's working, what's not working, do experiments and that kind of stuff. So, all right, that was. I don't know, Steve Alexander, do you want to make any comments on your tweets?
Yes, I do. About a week or so ago, I closed my Twitter account. I've got over 300 followers, and if any of you are following me on Twitter, what I've been doing is since June of 2019, I have tweeted my trades before I made them. So I would say tomorrow buy TNA, tomorrow buy QQQ, whatever. So I've been doing that since June of 2019, but I am not going to do business with Twitter. They insist on censoring people, including the president of the US. So I closed my Twitter account, and if anyone wants to continue receiving those trade signals, because I've done pretty well on the trades. 2019, my account was up 145%. And in 2020, from June until now, it is currently up 104%.
Very nice.
So all of my trades have been posted to Twitter before I did them, the day before. So I'd say trade tomorrow, tomorrow buy, tomorrow sell. So I stopped doing that. But if you want to be on my list, send me an email.
We'll post that. We'll post the email instead of, don't say it on this here. We'll post it in the chat.
Okay. Yeah,
And if you could do that. So yeah. I'm trying to keep this as so people don't somehow get spammed. I hate to have this YouTube stuff get out there and get somebody really starting to trash us all. So, but the chat I keep separate.
Yeah, I don't want to make it what I will have. I've got my private email list, and if I get your name and you want to be on my list, just email me directly and I'll put you on the list. But otherwise, you won't be on. And I understand that the Twitter, I did tweet one last time, and I announced that I was going to do this, but apparently Twitter didn't post that one. So
yeah, no, I didn't see that.
Yeah, well, anyway, so that's what I said. So you want to be on my list, right? Let me know and I'll put you on the list.
Cool. Hey, Steve, I have a question on how do you allocate 100% of your funds to each trade, or are you in multiple positions at a time? And if so, do you kind of spread out your capital that way, or?
Currently, I put $30,000 into each trade, and I don't think I've had more than 2 or 3 trades open at the same time. So it's less than $100,000.
Okay. So you have 3 tranches of capital basically that you allocate to, because you could have multiple signals at the same time going.
Yeah, but during the last 2 years, I don't think I've ever had 4 positions all at the same time. I have had 3, but most of the time I have 1 or 2.
Okay, thank you.
Yeah.
So when you say like gains of 100 and something percent, that's of the whole account or of just each tranche?
The whole account.
Okay.
Yeah, and so here is, Steve also has a blog called Steve Says Blogspot. In the last, if you go to Twitter and you look and see at random 4, go to at random 4 here. Where is it? Let's find it here. Random 4. It still has some of it.
Mine says this account doesn't exist.
What's that?
At random 4,
You closed it.
Twitter, it says this account doesn't exist.
Yeah, that's right. It doesn't, because I closed it.
Yeah.
Yeah. So the last time I did it, there was oh, interesting. So it doesn't even have that anymore, because it actually had a reference to his blog posting here. Steve says .blogspot, and I was suggesting that might be a place. It's been since 2014 since you entered anything there, but might be something that you could use to be a record of the new tweets of the new trades that you're putting out. But anyway, I'll leave that up to you, Steve. Just email is probably the best for right now.
Yeah, just email me. If you don't have my email address, ask Ken or ask anybody in this group. Most people have my email address.
All right. Cool. All right. And so I think this is the date here. This is Twitter. And this is the date that Steve got out of Twitter. And you can see the impact on Twitter. I mean.
Oh, yeah.
So anyway, yeah. All right. So the last one that he sent out was I think it was this TNA trade.
Yeah,
and,
currently I am long TNA.
Yeah. And so here's the buy signal on TNA, and it's down just a little bit.
Yeah, it's down.
But we'll see. We'll see how it goes. So as long as it doesn't go, so this is kind of his. I reverse engineered his a stop loss, and this is kind of where the stop loss is here. This gray line. So anyway, all right. So any other comments, suggestions?
Yeah, Ken, can you talk a little bit about how you use your money flow indicator? It's something I've been trying to incorporate and learn more about. What kind of time frame has you found it to be useful? Anything you can talk about that?
Yeah. So there's a special set of data available that I've only been able to find in TradeStation, and I think it might also be available in big charts. Let me get a drink of water real quick here. I found this in big charts many years ago before I had a TradeStation account, and I was doing it with spreadsheets, and I actually tracked the number of the volume on each bar times the price difference. And when you do that, you actually can come up with a money flow. It doesn't work for day bars. It does work for intraday bars. So
How come?
it's the data set that's available from TradeStation. So TradeStation has a different data set for daily bars as opposed to intraday bars. So on the intraday bars, you can actually see the number of times that it hit the bid and the number of times it hit the ask. And so that's basically what I'm doing. I'm running off of, and it's just basically integrating all of those. So there's no, I put a moving average on it. You can see the moving average here, but the absolute value is purely the accumulation of
I see. Well, if you're doing swing trading, you know, anything from a couple of days to maybe 2 weeks or so, what time frame would you look at?
So this exactly here. So 30-minute bars.
30
so
minutes?
I would use typically 30-minute bars. Yeah. So that's what I've been showing people, is that all my stuff is based on the 30-minute bars. I'll look back 20, 30 days, that kind of stuff, just to see what's going on, what has gone on in the past. Sometimes you see these anomalies, this big spike here, and that could be a aftermarket move, and they just basically just said that's all hit the bid or the ask. That's all hit the ask here. So those things are anomalies. I sort of take those out by eye. I said, no. That's basically been going sideways. Somebody big did something there, but it's not. It's anomaly. So there's a few things that are problematic in it. Any of these big steps are problematic, but when you look at the flow, when you see the thing flowing up, that to me tells me a lot.
I see. Enough? Yeah, that's but half hour is a fairly short time period. I guess if you're just trying to time your entry or something, but if you're trying to make an investment decision for the next, week or two, would something like 2 hour or 4 hour bars work better? Or I'm just thinking. I don't know the answer to this.
I use a 300-minute chart to do this.
Yeah, so you can use a 360-minute.
That's a 5 hour bar. Okay.
Yeah. So I have used 360-minute bars as well. So you basically have to do things that are going to be intraday. 360 or 390-minute bars, right?
Okay. Well, 300 is 5 hours, right? 360 is 6 hours.
Yeah. So
that's almost a day.
390 is a whole day.
6 and a, okay. Well, but you're not using daily bars. You're using 390-minute bars.
Correct.
Okay, I got it.
Yeah. So anyway, so it was just an anomaly. I found. I had this stuff that was working really, really well on big charts years and years ago, and I tried Thinkorswim, I tried TradeStation, and then when I ran across this little bitty nugget of information as to how what they actually were doing inside the bars, I said, hey, this could be useful, and I sure enough programmed it up, and it matched almost 100% with the stuff that I was doing in big charts. So big charts actually had money flow that must have been running off the same set of data, but Thinkorswim doesn't have it. Ninja Trader doesn't have it. Nobody that I've seen has the data set. So this is the only place I found it so far. All right. Anything else?
Well, how about kind of a little more like annual predictions or broader market predictions? I know we spent a lot of time talking about small time frames, but I find a little more interest in long-term.
So Grant, you're an investor? Are you an investor then? Or?
I guess, I don't know. Sure.
So how long do you typically hold trades?
Long term, over a year, I guess would be typical. Okay. I mean, I trade short term for hedges and options and whatnot, but that's that's a small portion of the account. Most of it's kind of buy and hold. Like, I mean, like I've talked to you about UDOW, and my biggest single long-term positions are from March last year in UDOW, and a lot of my other parts of the portfolio, either where I can't buy things like that or I can't hedge directly, I try to indirectly kind of mimic about that level of leverage.
Got it. Got it. Yeah. Okay. All right. So you might want to, I don't know if you're willing to pay any money, but Larry Williams has a very good predictor of the market movements and stuff. So you might want to try to pick up on his stuff. I did one that was kind of based on some of the stuff that TradeStation had and something that Larry Williams had. And this is basically SPY, and it tries to predict the relative motion based on the last 12 years. So for the last 12 years, you can see how what price is kind of done. And it starts out the first of this year, and it's predicting that in January, February. In March, we should see, the 1st of March, we should see a pullback. And then around March 19th, you should see it starting to pick up again. So I don't know if that's the kind of stuff you're looking for, Grant, but everything seems to be, I mean, everything's in the bull market yet. So there's, until we see something change, something radically change, but I don't know. Jack?
Some of the cycles experts are, some of the cycle experts are expecting a bottom probably around middle of March, which coincides with what you're saying, Ken. But if the bottom is going to be, middle of March, then the down move, we don't know when the down move is going to start, but it could start as early as next week.
A down move based on overall market, turning into a bear market, you're saying?
Correct. Well, I don't know if it's a bear market, but they're expecting at least a 10% drop.
Yeah, I think that actually showed more than a 10% drop there. Let's see here. So that was 393 to 376. Not quite 10%. That's 15% drop.
Okay.
Yeah.
Well, those are the kind of moves that those are the kind of moves that I hedge for. So I can't say I really predict a 5 or 10% move downward. I maybe tighten up some of the protection when I get nervous, when I kind of see it a little more in the larger technicals and whatnot. But I guess more what I'm wondering about is the read on whether or not next year can be a bull market or continue or whatnot, or looking at this as an election cycle. What do people think about the next 4 years and not those opportunities just as well? The elections finish regardless of your politics, because it's kind of like, well, that's not my point. As is, we're done with the election. Things are kind of, people have their read on the economic kind of temperature that a particular party brings to it, and that's done. The markets usually kind of behave more normally after an election. And anyway, I'm looking at the larger cycles. Anybody looking really more at the macroeconomic view coming out of I don't know, or the stimulus spending and whatnot? What's going forward?
So when you do this, one of the things that I've done in the past is, I see something like this possibly coming up in March. So what I will do, if you have like a portfolio, is I'll put on a collar. And are you familiar with collars, Grant, or not?
Yes, that's I'm one of the big users of such strategies.
Yeah. So I've done that a couple of different times. I was fortunate to have those situations on Netflix and some other things. And I put the collar on, and it was really great that I protected myself. And the collar that I put on was really unique because it still collected money. So that was really, really nice to put a collar on, protect yourself, have good upside potential. And That was sweet. So are you doing that across multiple accounts then? Or are you doing it within the same account?
Multiple accounts. I mean, that, and broadly speaking, when I say hedging, that's the kind of thing that I'm doing.
Okay.
But I mean, more just, I guess what I'm getting at is pre-election cycle, we've had some discussions about where the market is. But everybody, not everybody in this group necessarily, but many people kind of thought, well, we're hitting new highs and people get nervous and are expecting pullbacks. But I've just kind of, I don't know, I've still got my bull hat on, I guess. And I'm wondering if anybody's got any real kind of good models of why it needs to pull back now, because I don't really see it. I continue to keep my bull hat on, and I'm just kind of really wondering if there are really any real cases for the bear market.
The key is if you look at the at these pullbacks that we've had, the thing that just gave it a shot of adrenaline here is the stimulus package, right? I mean, that thing is what's really rocketing this thing up. And the last stimulus package was what, $1,200, and they're talking about a $2,000 stimulus package now. So I don't exactly know how broad it's going to be, but depending upon the breadth and how much money they inject in the market, that's basically going to pull the market up even higher before it crashes. I mean, if it does crash, it's going to be somewhere after that gets digested by the market. Make sense, Brent, or not?
Well, yeah, no, I mean, I believe in that somewhat, but there's some expectation of a stimulus package getting baked in, and I'd hesitate to call March kind of just an overreaction in general. Before the stimulus package was announced, it was, you know, I think based on the fact that the average earnings didn't really collapse, and financially, it's COVID hasn't been as bad for many businesses in the market, you know, the broader markets. So I think that's why it rebounded. So there's support from the Fed and the stimulus package. So everybody who sold really defined a pretty hard bottom. I mean, there's been lots of talk through the year that, about a second dip and whatnot. And I never really thought that was coming, because I think the market really provided the last test of those levels. We don't really need to be there. And I basically, from that point, put on my bull hat and kept it on since through the year.
Okay.
Well,
So,
there are two pieces of information that we also need to bring into the analysis. One is the rollback of Trump level taxes, right? So Biden said that he was going to do that within 100 days in the office. That means, standard public company is probably going to pay 7% more in taxes or so. Okay. So you're paying more in taxes. Obviously, that's going to hit your earnings, and therefore it's going to affect stock price, right? So I don't know if that has been included in the analysis or not, but that could be one issue. The other issue is that we're just printing money like there's no tomorrow. And there's the issue of inflation, even though the Fed said they're going to keep the interest rates low. But you're looking at things like food prices have gone up. Fed is not controlling the food prices. They're going to, cut down on fracking and other stuff. That means oil prices or gas prices will probably go up. And what happens on an inflation is the assets are the ones that keep the value. So here's the interesting dilemma. On one side, taxes are going to go up, and one would assume that that's going to be a negative for the stock market. On the other side, inflation may be going up, but and that means assets, and stocks being assets, that would go up. There may be a difference in the timing. The tax issue may hit before the inflation issue, but those are the things to consider, not just the $1,200 or the $2,000 stimulus.
Well, if you look historically, though, you see in this chart here, I just lost it. If you look in this chart that I have, you can see it, perfect correlation. Here's the coronavirus coming in. Here is the stimulus package. So it was going through Congress, and when they finally signed it, that's when it jumped up. And you can go back historically, you can see exactly the same thing each time. Government shut down. Okay, that was a stimulus in effect. I've tracked these things for, I don't know, 10, 15 years now, showing the major events that happened.
Wow, that's really good. Can you go to the beginning again? I mean, to the end. I meant, yeah.
Okay. So
Yeah, that's pretty
here
interesting.
are where, I don't know why nobody else does this. I'm trying to figure out a way. I was going to put this on my website, and if I could put it in an HTML format so people could just scroll back and forth on this large picture, that would be great. And I haven't figured out how to do that. I made a video a long time ago, and you could scroll through the YouTube video, and you could see all these different aspects. And that's what we could do today. I mean, we could actually take a look and see. You go back and watch this video that I'm producing here today, and you can take a look and see what exactly has happened here. Here's where the Senate,
Confirmation.
the Electoral College Senate confirmation. And so what happened after that, the thing just jumped up, right? So each day, you can see election day, you can see what happened election day. Trump got COVID. What happened there is like a little bitty blip. So each one of these things, I tried to track news items as best I could. So the big one was anytime you see a stimulus package of $2 trillion, that makes a major move in the market. And the numbers that they're talking about right now, does anybody know what the numbers are? The final numbers on the size of the package? Is it $2 trillion or
1.8 trillion?
I heard 1.9.
All pass.
Okay, so 1.8 trillion. So another 1.8 trillion dollars. I would imagine you'd see something of this ilk going on, because the money's going to go somewhere. And I did a presentation many years ago about you basically put more money into one market versus another market, and it basically inflates that market. So and it was pretty cool at that time. I was actually able, Liz Ann Saunders actually said how much money is in the total market, and she said, okay, this is what's happening. And when all of that money went from the bonds into the stock market, it was perfect correlation, and I could tell you exactly what the price of the stock market was going to be, like 6 months, 9 months in advance. That just blew me away. I didn't realize that would be that good of correlation.
Yeah. Well, I guess on that note, Ken, I don't disagree that the major news items, significant news items, causes the market to pivot. But back to kind of what Jack was saying, I totally agree on those points as being major factors in the economy. Looking through the next years. But I would say that the taxes should be like you said, for companies that may impact in the single-digit percentage range. You said 7, and sure, that's going to affect companies. But things like the inflation and the Fed and the stimulus package, to me, those are and the debt incurred, I guess, are really more important as far as driving the inflation, which will be larger than the annual effect on the taxes. So again, these are reasons why I'd continue to have my bull hat on, because I think these are all strong tailwinds that the Fed, the stimulus, the printing of money will all cause things that will get tangible assets like, well, real property and stocks to be worth more, a company to be worth more in the future. And so I'm thinking it's full steam ahead for the next several years is what I'm thinking.
I don't know if it'll be several years, but there's a good chance of it. Here's something that I don't know if people realize. I did this study years ago. I put up this is coffee. This is futures on coffee. This is monthly bars. And you say, you look at this and you say, gosh, coffee used to be $300 in the futures contract. And then it's down to $128. You say, oh man, coffee is just going down, 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 down. We don't have any inflation. Well, it turns out it's the way you roll your contracts. This is a continuous contract. If you go to the absolute contracts, here is what the real price of coffee is. This is the absolute value of coffee over the same period of time. Instead of going down, it's down, it goes up, it goes down, it goes up, it goes down, it goes up. So when you are looking at a commodity like coffee, or you can look at a commodity like copper. Here's copper. And you look at copper and you say, well, okay, copper's gone up and down, it's been all around. But when you look at the absolute real price of copper, that's not a good example. It's usually that one basically reflected the same thing. Soybeans, for example. Here's the value of soybeans. And if anybody's into soybeans or into futures, this is a great curve. Soybean it looks like it's going up and down, it looks like it's inflating, but realistically, it's back to where it was. And now it's starting to move up. So there are, on TradeStation, you can actually access both sets of data. Here's rough rice. So it looks like rice is going down in value. And then when you look at the real value or what the real price of the contracts were historically, they're basically flat. So,
well, actually, that would be a very interesting telling story, Ken, because if inflation hits, those flat prices, actual prices, it should be going up, right?
Exactly. Exactly.
Right. Bring up lumber.
And could you explain the difference between the two? Why is there a difference between the rolling versus the absolute?
Yeah, a second. All right. And so this is lumber. And let me see if I may or may, oh, I don't have the, let's hold on a second. I should be able to put together a lumber one. Let me see here. So it is,
Ken, is the variance because of the rolling? They're not rolling on expiration date, but they're rolling like the week before or whatever.
Correct. Exactly.
What most traders do.
Yeah, exactly. I don't know if this thing working on. Okay, I can't. I'll have to poke around. I don't know about lumber. I don't know how that one would come out. I cannot get that to come out. But that's a good one. I'll have to take a look at lumber. I'll have to poke around and see. But you can look at a large number of different commodities. Corn, for example. So here's corn. And you say corn has been going down in price. Okay, we're getting cheaper corn. And then when you actually look at the bushels, the price per contract, it's actually shooting up. So corn and soybeans are shooting up. In my opinion, this is an early indicator of inflation. I don't know if anybody else has any other opinion, but when it shoots up like this, that's not a good sign. And I have gone, I'm vegan, and when I go to the grocery store and I get my vegetables, I used to be paying only about $20 to $25 a week. It's up to $40. So, yeah, I think there's inflation, and they're just not making it known in any of the consumer price indexes yet. And then with the stimulus package coming in place, it'll be even more, there'll probably be even more inflation. That's my opinion anyway. Anybody else?
I mean, from what Grant was asking, who knows what the future holds, but I have a portfolio that I manage long. And
Octavio, I can barely understand what you're saying. Could you put your mouth closer to the microphone or something? Or?
Sorry about that, folks. I'll make it quick then. Is this better? Is this better?
Yeah, that's better.
Okay. So I have a portfolio that I do manage long, and at the end of the day, thinking what Grant was asking, what Jack was stating, and what you showed, starting about a few months ago, I've been just averaging in over time, buying commodity ETFs, just to hold for the next few years. That's a portion of what I would use to think about inflation. To Jack's point, you have to it may be an inflation adjusted asset, it may be zero over time, but at the end of the day, I'm investing in commodity ETFs to.
So you said you're investing in commodity ETFs or the commodities themselves?
Commodity ETFs.
Okay, commodity ETFs. Okay.
So, so I'd like to ask you something, Ken, quickly, and that's giving your suggestion that there's some indication that there's inflation starting to happen. How does that influence your trading? And not long term or anything years long. I'm just interested in just sort of roughly generally. And also unrelated to this, I'd also like to thank you because I really think you're just with your code that you put on your website and your forthrightedness and your transparency. This is just fantastic. So thank you.
Thank you. Appreciate that. Appreciate that. So I got all involved in the last part of it, which I really appreciated. Now, can you restate your first part there, Bob?
Yeah. So basically, it was about the how. So you're suggesting that you see some indication of inflation, and the question is, how does that influence your trading, or do you still press on with pride, or sort of what does that influence your trading? That's the basic question.
So my trading will now start moving to futures. So I will take anything that's moving in a nice trend, and when I see rice going up or soybeans, since I'm vegan, I need a lot of soy. So this is a phenomenal chart. I mean, I'm ready to go, and I'll start buying futures contracts in soybeans and rice probably. So that's my influence. I'll just switch horses, I guess you might say. All right. In terms of the long-term stuff, I still, I've been running this stochastic for K-stochastic for 10 years, and I made presentations about it many years ago. The thing keeps on just keeps on working. So this tier started with $100,000. It's up to $485,000 now. It's still in the trade TNA. So that's the stellar one, right? And then I've also got TQQQ. I don't know which horse is going to be the winner. I was riding the TQQQ horse for a long time. And yeah, it's done okay. It started with $100,000 and it's up to $323,000. So, but you can see where it trades. It got in and it got out, and then it got back in way up here and made a little bit of money, and it isn't back in. It's like, oh man, I'm missing all this opportunity. So what I end up doing is I'm looking at, this doesn't happen but 4 times a year, right? So I've got a lot of time to burn in terms of trading. And so what I end up doing is I'm looking at Jake Bernstein's stuff, Steve's stuff, a lot of different people doing this day trading stuff. So to me, it's a game. It's a fun game. And it's a game that I actually make money doing. So it's kind of a nice thing to do. And then sharing these things with you guys. So you guys come back and, everybody produces a new set of data or new points in the discussion. And I'm going to be going back and researching various things this next week, which will be kind of fun. It's a great way to keep a 70-year-old mind active. And I really like it.
Nate, thanks. Thanks so much. That's fantastic.
All right, great. Any other comments, questions, suggestions? Got about 15 minutes.
Yeah, just to go back to Bob's question about the inflation trade, I've been kind of, ever since they announced stimulus, that was it March, April, I've been watching the inflation trade, and I traded some gold really well last year based on that. I think oil is now breaking out. It has broken out. I don't know how much higher it'll go, but and then all these other commodities that Ken has mentioned. So it does influence my kind of market selection. It doesn't really influence my strategies per se, but really what markets I'm looking at, which markets are trending. I want to be in those markets.
Right.
Which markets will probably continue trending.
Which ones are awake? Which ones are sleeping, not doing anything, and then which ones are really awake?
So commodities, Freeport McMoran is another one I like.
Yeah.
Those kind of stocks are really, I want to get in on those trend moves.
Yeah. So it's Freeport McMoran. I was in Bucco Aluminum, and that was doing really, really well.
Like I mentioned, lit.
I stopped out.
I mentioned lit earlier. U.S. Steel, letter X, also is another good one that's been doing well.
So, but even FCX though is flat. It's been flat for a couple of weeks now. So are you still do you play it? Do you sit in it? What are you doing there, Scott?
I think at this point, I'm not in it right now. I think I'd wait for a breakout. But I mean, November, all those stocks did really well in November. The November to remember, they're calling it.
Yeah.
Letter X, same thing.
Yeah. So okay, so you basically swing trading the leading horses too. It's nice you could actually bet on a horse that's on the track and running, and that's really nice. You can't do that when you go to betting on horses.
Yeah.
So cool.
I sent a link in I put a link in the chat to a chart of March lumber, and it's up. It's doubled since May.
Okay.
It was up even higher, but just pulled back since. But so lumber's definitely running as well.
Yeah. Okay. And then also somebody put in the chat. If people don't know about the chat, go to the chat window. Hannah, I guess, brought up Larry Williams did a 2021 outlook. So Grant, if you are so inclined to maybe take a look at that that YouTube video, and usually gives a little tickler as to what he sees coming up, and then of course you got to pay him $100, $200. I don't know what he charges for his outlook. I don't think it's outrageously expensive. Jennifer, have you ever priced it? I think. Don't hear Jennifer.
Maybe we can all pitch in together and buy one.
Yeah.
Yeah.
I swing trade, so it's like I could care less. I've got all this stuff that already in place. So as long as my stochastic keeps working here and making 30 to over 100% a year, that's where a majority of my money is. And also planning on this increase in taxes.
And part of that is that you pick the right markets too. You have to pick the right market.
So the key is that I've got these three. I got TNA, SPXL, and TQQQ.
So you just leveraged indexes then, yeah.
Right. Yeah. So I'm swing trading the leveraged indexes, and basically, if all three of them hit on the same day, I am 100% in. My entire net worth is on those three equities, and I split them a third. So I have all but I guess not all. I think I got 15% that I still keep in cash if all hell breaks loose. But other than that, yeah, that's I'm all in on that. But this thing here, I didn't get in as much. So one hit one day, one hit the other day, one hit another day, and so I didn't have quite the confidence that I usually have when all three of them hit at the same day. So I'm only like 60% in. But it's working out good. So, and then also, I do trade intraday even on the options on SPX and SPY. It's not many people are so inclined to do that kind of a thing, but you know, people talk about these things waiting an entire year to gain 100%, and here you got SPY, and it went from $1 to $1.56, and actually it went from $1 to $2.48 in the matter of a half an hour. And the liquidity on that thing is very high. That's just, those things are going to expire on Tuesday. So, keeps me entertained.
Are you doing long positions?
Yeah, only
With
long.
spreads or with long options?
Long option only.
Okay.
Yeah.
And then very short expiration. So if something goes wrong, the delta's going to hurt
Day
you.
out. It's
I mean,
day
the
out.
theta is going to help you, hurt you. Yeah.
Yeah. So the day of expiration, theta is insignificant. You don't even see theta because
On the on the day of expiration,
yeah,
theta
yeah,
is huge on the day of expiration.
compared to a 100% price move, it's nothing.
Of course, delta always trumps theta, or at least most
Correct.
of the time. Yeah, but theta is you know, we made a lot of money just trading for theta with zero DTE SPX options.
Yeah,
So,
so you can make money on theta, but how much money can you make in a day percentage of your capital invested?
right. Well, anytime you're day trading spreads, it's going to be a minuscule ROC.
Right.
So we know that it's not going to be much more than 10 or 15%.
Ken?
There's a couple of different ways of doing it. It depends on what you feel comfortable with. Grant suggested tranches, Jack, and you were mentioning all out or all in, and that's another way. So, but the thing is, for me, it's like I try to maximize the point where we are. Here's where we are today. So let's see if we can make a little bit more money, or if it just turns around and just goes south, just get out.
Right.
We also have some other control signals here. This is the Investools tool set, so to speak, and it looks like it's just about ready to turn up on it's called the MACD and the stochastic. So it would say that, you know, you're probably near somewhat of a bottom. It could turn around and go back down, but typically when you see it go up, it tends to go up with a little momentum. So you should be okay on the upside a little bit. And then also you've been collecting dividends on TLT over the period of time too. So you have that going for you as well. Hopefully that answered your questions, Renee. You know where I live, so we can talk about it more if you need some more. All right. Any others? I'm sorry, we ran over time. And anybody else have any quick questions, suggestions, comments? I was going to close this down here, and then Scott, if you could hang around, we'll talk a little bit about the TradeStation at the end of this.
Yeah, I got a quick question.
Right.
Did anybody attend the virtual money show this past week?
I didn't know there was one.
At any rate, there's a gentleman that did a presentation named Matt Choi.
Oh yeah, Matt.
Mm-hmm. Familiar with his seasonality trade that he does.
Did he record any of that, or is there any?
I think the money show was recorded. I think if you signed up for it, or even if you haven't, maybe I think they do provide access to the presentations. But he did a very concise, well-explained presentation on his seasonality trade that he does almost daily. Of course, he has a newsletter that he was promoting that he gives the trades, but he showed you how simply to go into Yahoo Finance, pull up the data, create a spreadsheet in Excel, and get the data yourself, and then trade the seasonality trades. I was just curious if anyone was aware of that, or had wanted to get some feedback from the group if anybody watched it. But it doesn't sound like people knew about it, so maybe not.
So if Brett, if you do run across a video of Matt's presentation, Matt is very good. I've been tracking him for more than 10 years, and I really appreciate some of his work and learned a lot from him. So if you find a video of it, could you please send it to me, and I will try to post it to the group so that other people can do it. That would be great.
Yeah, I can do that. You bet.
That'd be great. All right. Anything else, anyone? Well, thank you all for attending. I hope let's see, I've got one more thing here is just to stop sharing here. And I wish you a very happy Valentine's Day, because I think that's going to come up before we meet again. So thank you.